Well, good morning, everybody. Thanks for tuning into this week's Spiders preview. We're going to talk about the different economic sectors that make up the spiders, and this is should be looked at as kind of a roadmap of where the market is, and hopefully knowing where these levels are and these trends are can help you with your trading. Um, I generally don't give trading recommendations unless I see something obvious in this particular piece of research, so nothing to worry about or to talk about on that front this week. So just to remember, in financial markets, there are certain price levels that are more significant than others with in terms of the amount of supply and demand that exists at them. And you don't need to be a chart guru or a Wall Street guru to realize that. I'll show you many examples in the following presentation. In financial markets, prices are always doing one of three things. They're going up, going down, or staying the same. And if you have an understanding and awareness of these dynamics, it can add alpha to your strategy terms of things like Gam theory and Elliott wave and harmonic charts. I mean, as far as I'm concerned with all that stuff, it's like Bigfoot and UFOs. It's fun to talk about, but it's not credible. And I can tell you in my 25 years or so as a hedge fund trader, I've never seen anyone successful in the institutional world use any of those so-called techniques. For people to talk about UFOs and Bigfoot, but not about GAN and harmonic charts. So we just try to look for important levels, and if you know where they are, and the important trends too as well, if you know where they are. So this is just an overview. You can see this on my website, so we'll skip through this. Okay, so here are the SPYs for the last 6 months. One thing to look at is they're overbought. You can see down here. This is the relative strength indicator. And the thing about these momentum indicators is it's funny when I see people have like 4 or 5 momentum indicators on their chart because they all measure the same thing. Um, my suggestion is just pick one or two and get comfortable with them. This is basic RSI. It's using the default settings. Really just tells you where the stock is in relation to where it was X many days ago. And when it's above this red line, it's what's considered overbought. And when it's below this line, right here, and where would this one be? Here, I guess. So oversold. So anyway, so we got we're gonna have resistance at 293 because that's where the highs were last fall. You can see the trading has been kind of sideways. I expect that to continue. One is because we have this important. This is just a longer term chart of the SPYs, and this illustrates how certain levels are more important than others. I mean, you don't need to be a chart guru to see this 280 level is important, right? Here's 280. Here's 280 back here. Here, it was support here. This doesn't look like much, but it was like 3 weeks in July. Then these three peaks here, and then we spent some time consolidating. So the 280 is an important level. So if we do see some profit taking, I'm going to be looking for some support there. Again, you can see that we're pretty much overbought. And again, this 293 level will probably be important. And you could kind of look back. I think this is 286, right? When this was an all-time high. It was important when it got to here, right? And this is back in, I guess, August. It was a top there, and then you could see it was support. So there are levels that are more important than others. There's no doubt about it. Here's the tech sector, and this is the biggest sector of the SPYs. So it's obviously important. It's 30%. Now you can see we're testing the same areas. Well, I mean, we're testing the recent highs here were September and October. And you can see that for this tech spider, which I personally don't trade because I just find the levels too unprecise. But anyway, you need to pay attention to it because it gives you direction of the overall market. But anyway, look how overbought it is. And the last times we were, this overbought here, 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 you could see there was some downward action. And this time here was right before the big sell-off last fall. Recently here. So again, because this is so overbought and running into what's probably going to be resistance level, I would expect some consolidation or maybe some short-term profit taking. Nothing too dramatic or major. Financials, you can see here how the levels between 27 and 27 and a half have been the top of the range since last November. So Friday's close was slightly above. I'm not sure, but I think it was like 27.12. So this is something you can pay attention to. If you don't even need to see a chart or see the market, but if you see the quotes over the next couple weeks and you notice that the XLF's closes are above 27, 27.50, that's going to be important because it'll show that the 27 level is becoming support as opposed to resistance, and from there it could be set up the stage for a rally. This is another reason why I think this rally over the overall market is going to consolidate or sell off a little bit. This is healthcare. You can see how the 96 level was so important. It was a top back here, and it was a top here. And this is into like within pennies of each other. There's no way an academic or a fundamental practitioner could ever explain why that happens because this is a basket of I don't know how many equities, dozens, and two different points in time, it was at the exact same valuation, right? I mean, that shouldn't happen if you believe in efficient market theory. But obviously, a lot of it has to do with these ETFs. I've looked at a lot of charts, and I go back to like the 20s and 30s because I'm a kind of a historical, uh, nerd. Um, and back then, you just did not see these things have the precise levels that these ETFs do, like the Dow Jones. It just, I mean, there were levels, but they just weren't within, pennies of each other like this and this. It's really extraordinary if you think of it. Oh yeah, but this is what I wanted to point out too. Their action in the XLVs has been really bad the last 2 days. Real, distribution days, 2 really negative days. And looking back, I don't really even see 2 days that were that, you know, distribution days, I guess is what you would call them. I mean, it looks like one here, but there's a little day in here, right, that you probably can't see. So anyway, XLVs, poor action. So far we have the tech sector at resistance. We have the financial sector at resistance. We have poor action in the tech sector. This is consumer discretionary, and you can see it's been testing this 118 level for the last week. And why is that an important level? Well, because it's where the highs were in September. Very overbought. Last time it was this overbought was way back here before this, little profit taking sideways consolidation pattern happened. So it's another reason for. Here's the industrial sector. Um, you can see it's just been kind of trading sideways. Broke this trends and trends are too. Trends are nothing mysterious. It just shows that when something is uptrend, these forces of demand are in control, right? It's like X's and O's on a football thing. And when something trades sideways, the forces of demand and supply are equal. And when something is in a downtrend, the forces of supply are in control. So that's how trends should be understood. That's why I draw on trend lines as an art, not a science, but it's nothing mysterious or magical. It just shows. I mean, prices trade in trends, whether it's the gallon of milk at the supermarket or whether it's this XLI ETF. I mean, milk's not going to go from 2 to 4 to 210 to 420 to whatever 350. It's going to go from 210 to 220 to 230 to 240. So you get what I mean. That would show up as a trend on a chart. Consumer staples, we have approaching recent highs. Well, actually, really testing recent highs around 50. Sorry, 56.50. All right, so there's another thing another sector of the market that's facing resistance. This is a long-term chart of the consumer staples. I just like to point out how important this 50 level is sometimes. See, it was the top all through here in 2015. It was a low, again, almost to the point in September of 2016. And then the two recent bottoms are exactly at 49, which, well, I'm sorry, it's $1 off of 50, but it's, close. And anyway, bottoms are always harder to define because bottoms happen due to selling, which is driven by fear, and tops happen due to hope, which is less than powerful emotion. This energy sector could finally be breaking this 6650 level. It's been the top since January, I think. Actually, no, since March. Oil is overbought. You can look at that in my energy research. But anyway, so trading up. You can see this 6650 was important. It was back here. The 78 level is obviously important. Again, you don't need to be a chart guru to see that that's an important level. Long-term picture of it, you can see how important the 78 level was. It was, back here, back in 2016, since the end of 2017. And then you can see support levels are 55 is an important support level. And this is the 6650 level we were just looking at. You can see it was a bottom here. Okay, materials, which is usually the most boring sector in the world, in my opinion, is testing the, and like keep in mind, like this to this is only $2. But anyway, it's testing this 58 level, which was the bottom from last June through September. So it was support then, so now it's resistance, and it's overbought. Last two times it was overbought. You can see well, it was right before these two little, this big sell-off, but then this sideways consolidation. All right. Last but not least, here are the utilities. They broke their uptrends a few weeks back. A trend that started back here around 52, their beginning of the year, which was where the bottom was in September. Again, another example of a level that's important. So anyway, they broke their uptrends. Now they're kind of trading sideways. I'm watching support at this 57 level because it was a top back here. So that's it for this week. Again, going forward, this week coming up, I expect sideways to maybe some slightly down action in the markets. And the reason why, as we just saw, is that there a lot of these sectors are at resistance levels and some of them are overbought. All right, so that's it, everybody. Thanks for tuning in. Hopefully, knowing where these levels are can help you with your own trading. Um, Someone might ask, how did that happen? Well, I mean, look at financials, for instance. Say you have a bank you want to consider selling. Well, you may want to sell it out because it's at resistance. If you want to, there's a bank you want to consider buying. Well, you may want to wait for a week or two to see if that resistance is broken. You might pay a slightly higher price, but your your risk reward ratio is going to be much better, and the odds are that you're going to make money are much greater. All right, everybody, thanks for tuning in. Have a nice week.